Welcome to the final video in our Core Technical Indicator series. We've saved the most fundamental tool for last: moving averages, or MAs. The MA is the single best way to define the market's current trend. Important disclaimer: MAs are lagging indicators. They tell you where the trend has been, not where it's going. This is for entertainment and education only. Always use MAs in conjunction with price action. What is a moving average? A moving average is simply a line that smooths out price data over a specific period. It helps filter out noise and clearly define the market's direction. Type 1. Simple Moving Average, SMA. The SMA calculates the average price over the last n days, giving equal weight to every day. It's the simplest and smoothest type. Type 2. Exponential Moving Average, EMA. The EMA gives more weight to the most recent price data. This makes the EMA react faster to price changes, making it more popular for short-term and active traders. Strategy 1. Trend Definition. The easiest use of MAs is defining the trend. If the price is consistently above the MA line, the trend is up. If the price is consistently below the MA line, the trend is down. Strategy 2. Dynamic Support and Resistance. When the price is in an uptrend, the MA often acts as dynamic support. When the price pulls back to the MA and bounces, that is a strong buying opportunity. Strategy 3. The Golden and Death Crosses, Long-Term Crossover. The most famous MA signal is the crossover of a long-term MA and a short-term MA, e.g. 50-day and 200-day. The Golden Cross, short MA crosses above long MA, is a major long-term bullish signal. The Death Cross, short MA crosses below long MA, is a major long-term bearish signal. Strategy 4. Short-term crossover strategy, the trade signal. Traders use two shorter-term MAs, like the 10-period and 20-period EMA, to generate quick entry signals. When the fast MA 10 crosses above the slow MA 20, it generates a buy signal. When the fast MA crosses below the slow MA, it generates a sell signal. This is best used in clear trending markets. Advanced tip: filter whipsaws. In sideways or choppy markets, the MAs cross back and forth repeatedly, generating whipsaws or false signals. The rule: only trade MA crossovers when the two MA lines are clearly separated and sloping in the same direction. When they are flat and hugging the price, avoid the crossover strategy. Moving averages are the bedrock of technical analysis, providing the clearest view of the trend. Use them to filter the signals from your RSI and MACD. What are your favorite MA periods? 20, 50, 200. Let us know in the comments. Subscribe to Weather Finance for the next video, where we combine all our tools into a complete trading system.